The interest rate cut is likely to stimulate economic growth as well as giving banks more cash in hand. Pollyanna De Lima, market economist. So, Pollyanna, India's central bank have cut interest rates from 6.75 to 6.5% earlier today. What is your immediate assessment of this decision?
Well, the latest 25 basis point cut to the benchmark rate should boost economic growth in India, but only if banks pass this on to borrowers. So banks have been slow in cutting the rates charged from borrowers in the past, which they link to tight cash conditions. But in this latest announcement, the RBI has taken steps to improve liquidity in the financial system. For example, the cash reserve ratio has been cut from 95% to 90%, and the RBI committed to injecting more long-term liquidity by buying bonds or buying dollars, selling rupees. So, given all these factors, we should hopefully see a pickup in economic growth in coming months. But aside from economic growth, we need to think of the impact on prices as well. The latest decision has been supported by low inflation, with the CPI down sharply in February on the back of falling commodity prices and oil prices. So this has been shown in the price indicators measured by our surveys, which are much lower than their long-run trends. But March survey for the manufacturing sector showed an uptick in inflation, with the input prices index reaching a 3-month high and charging inflation the strongest since November 14. So we need to keep an eye on them in coming months.
Okay, well, the rate cut should encourage investors and industrialists to open their wallets and increase spending at a time when the resilience of India's economy is being tested. Is this 0.25 percentage point reduction enough to offset the problems India are facing right now?
It should be enough. I mean, with the CRR being lowered and the reverse repo rate going up, banks will now have more cash in hand and are likely to make substantial cuts to their lending rates. So this should attract new borrowers as well as benefit existing borrowers who are on floating rates. I mean, mortgage holders would have more disposable income, businesses can look into expanding. So higher investment and consumption, along with strengthening confidence, are likely to stimulate economic activity and hopefully boost the labor market too. So one of the concerns I have with the PMI survey we produced is the labor market being quite stagnant for the past 2 years. So hopefully, while demand improves, businesses will translate into job creation. The global economic backdrop will remain challenging in 2016, but I expect a strengthening domestic demand to offset the weakness in export markets. So all in all, India looks set to continue to grow at a healthy pace this year.
Right, and lastly, the Reserve Bank of India cited a fall in inflation for its latest cut, with some analysts factoring in further rate cuts later in the year. Is this an opinion that you share?
This is also my view. I mean, the RBI will obviously remain watchful of inflationary pressures building up in the country, but equally committed to supporting economic growth going ahead. So the government's promise to stick to the fiscal consolidation path should help offset rising prices arise from the latest rate cut. So in my opinion, monetary policy will remain accommodative this year.
Thank you, Pollyanna. I'm Sam Meredith, and be sure to check back with the Dukascopy TV team for more updates throughout the week. See you next time.